Bring central revenue line at $612 million revenue goal. Ring at $1 a share is a 4-cent beat. So Rocket Lab will be reporting results, a penny miss on earnings, revenue, slight beat. Ruby Kill and Probably.
What happened here? Okay. Papu! What's up, everybody? Hold on one second. I gotta refresh this. Any interesting earnings out yet? Worthy of me knowing about?
XTREX, a 2-cent beat on earnings, revenue $340 million, beating at $329. Consensus take over the OECOX rate. Ukrainian President Zelensky saying he had a good phone conversation with Trump.
Zelensky, I forgot about that guy. There, let me even know this. Oh, TTD, yeah. What happened there? TTD. Oh. TTD. I think we've seen some leap buying in TTD, but honestly, they might be a little above break even. I think it was over here, right? They had a lot of time. Rock, let's see. R-O-K. Why do I know this symbol? Oh, yeah. Rockwell Automation. I ain't listening. It's a quality name, this name. This is a legit name. Wow. It's been messy as all hell, huh? For a while. Probably a cyclical, huh? Looks like a cyclical.
What they say, the escalation of brain rates.
What else was there? Coin? The coin report yet? Doesn't look like they reported yet. Maybe. SITM. C-Time. I'm not too familiar with this guy. C-Time. Yeah, profitable. Yeah, I mean, this is no Rockwell Automation fundamentally. What do they do? Semiconductor. Ah. Oh, Net reported today? Net's an interesting name. Ah, up a little, huh? Well, that's not too much anyhow, $5 on Net. We saw an interesting leap sweep in Net. NET. Yeah, something about this name I've had an interest in since the CFO from Google left and went to Net. Everywhere she goes, she's got the magic touch. Yeah, those are leaps. Definitely interesting there. We'll talk. There've been, and I think we probably talked about it. Did we get together last week? I think we did. But we probably discussed, I mean, the majority of the majority of action worthy of being spoken about has been longer term buying in leaps. Mostly quality names, but some names like a net. So that's interesting. We'll talk about that. All right. Let's dive into it now. Right, we're well past 4:15. What I'll do is go through kind of what has gone on this week. Right, what we may be what to keep an eye on in the coming week or weeks, and then I'll show you the signals in how and why I've come to that conclusion. Right, so based on that. But just to refresh everybody's memory or anybody who may be new to the webinar, I guess the common topic, the common theme we've been talking about more recent here has been that into the recent lows, right, in early April, you had a lot of what we were hoping and looking for out of this correction. If you remember, we went through a lot of that stuff, right? You had a form of panic and capitulation. You had a really, really healthy rinse on some of those big picture indicators that we like to follow in pullbacks and corrections. And it's not a crystal ball, obviously, but what it does allow us, it allows us to approach the markets a little differently because in all likelihood, with that type of magnitude of selling and de-risking in the market, you got a higher probability of, at the least, some floor being put in, right? And that's kind of how we were framing it. So even though we saw a nice rinse and a nice cleansing in positioning and sentiment, we weren't necessarily seeing the risk on new bull trend, new bull market signals that follow, right? They don't have to follow immediately. Sometimes it happens quicker than other times. Sometimes, we went over the 2022 bear market example. We had the same type of signals, if you remember, and that's where we were comparing it into the summer of 2022, those lows. The market retested in the fall of 22, and we didn't get those really bull market, bull trend signals until the calendar flipped into 2023. Okay, so it could happen months after some sort of floor and the lows are put in. All right, so generally, and in simple terms, how we were looking at it was, now that in all likelihood there's a high probability floor put in, and the worst of what we were seeing currently in that correction is likely over, the playbook for that, without seeing bull market signals, is to look for names that you may have had an interest in into the recent highs before the pullback, and look towards those type of names to buy with time, right? If you want to do it more conservatively, you look to piece in and put on a piece of a name you may have an interest over the longer term. Okay. For the flow, we want to look towards the flow for signs of any leap buying, right? And like I said, we have been seeing that, and we'll talk about that when we get through this. But that's generally how I like to look at and approach the market when you have those signals, indicating a high probability floor, but not necessarily, a new bull market, right? A new bull trend. And here's the problem with approaching it any differently, right? A lot of times you may get that floor put in, and you get that squeeze, that snapback reaction where a lot of names participate, but you don't really get the true leadership, right? The names and groups that are going to lead you out of this phase and into a new bull phase, unless you get those bull market signals, right? A lot of times you see kind of this snapback, violent snapback type rally like we've been seeing, where you get a lot of participation, especially early on, but mostly it's the high beta names, right? When people are scrambling for exposure because they don't have any, right? Because they puked it up into the lows, they're looking to play indexes, ETFs, names that they're going to get a big bang for their buck with the market, right? They're not really looking to be stock pickers per se, outside of the flow where we're looking long term, right? So that's why that's why we look at through that playbook, right? We want to look towards names that we want to put away on a longer term basis, and especially we want to try to take advantage of any weakness now that there's a floor put in, because that's really where you find an edge. Unfortunately, beyond the first week where you had still some volatility, because of tariffs and economic data in the Fed, we really, the last week or so, we really didn't have much of any pullback to take advantage of, right? As you guys probably seen, any day there was any weakness on the board, buyers step right in, right? Red to green, they really couldn't get any selling to stick. And I will talk about that as well and why that happens, okay? So now we're at a point where, we've come a long way from that point, right? From those lows. And even though big picture wise, and a lot of those indicators, as you're going to see in a second, and a lot of those signals are still bullish, right? Those longer term signals. I think now we're at a point where you want to be a lot more prudent, even with some of the longer term stuff you may be looking at as far as entries. You want to be a hell of a lot more prudent in regards to those entries. In other words, if a name has rallied violently pretty much in a straight line off the lows, like kind of what we're seeing with the markets, you probably want to be a little more patient and wait for weakness. Yes, weakness will show up, and look to take advantage of that weakness in a sense, okay? But I think the most bearish scenario here, and here's why I wanted to start the webinar here. Even though net, a lot of the big picture stuff still looks bullish as far as positioning and sentiment, a lot of the shorter term time frame stuff has really heated up over the last couple of weeks, okay? And, you run into the risk where if you overshoot to the upside on a short-term basis, a lot of times you got to pay the piper when that momentum runs out. And let me tell you what I mean by that, because again, I have a tough time of explaining it so you understand what I'm talking about. Yeah, we used what was going on in the market, what was going on with the Fed, what was going on with macro was completely different in 2022. Okay, so when I say the setup reminded me of 2022, I'm talking strictly on a positioning and sentiment point of view. Okay, I'm not talking about the economy or even the stock market in a sense. All right, but the same type of signals we were seeing in this recent low, as you guys remember we were talking about, we saw into the summer of 2022, which was right here. Let me get some of this off so you can see. Okay, this is December 22. Am I right here? Yeah. Okay, so now very ironically, very similar to the summer of 22, because positioning was so washed out, right? And a lot of the systematic and CTA and vol control positioning was so washed out, right? Because you get to a point where these guys were long and now they're max short. Okay, remember we were talking about that last week, where even if there's weakness, further weakness, they can't sell. They have nothing left to sell. And they're more likely to do buying into weakness. They do buying into all tapes, up, chop, and down tape, right? Which is a real nice tailwind to have at your back, okay? But what happens is if you get good news, right? Kind of what we're seeing now with the tariffs, Trump unwinding some of the tariffs if they're being so aggressive, and some of the economic data, once again, not as bad as a lot of people feared, right? For whatever reason, okay? You get this overshoot to the upside because as momentum builds, right? As shorts cover, as long players who puked up into the lows now want to put some exposure back on because things are looking better. And then you get now these systematic flows to not only unwind shorts, but as the market pushes higher, flip to the long side again. Okay? It's very often you get these type of overshoots. on a short-term time frame. And interestingly enough, back in the summer of 2022, you had a very, very similar play out, right? So you had the floor put in, kind of a little chop and still some volatility to deal with initially, and then the momentum started to build. And here's what I think is even more, what feels even more familiar with the 2022 low. As the market found the low and started to build momentum to the upside, a lot of the market savvy people out there, right? A lot of people on CNBC, the media, social media, whatever, they really not only didn't believe in the rally, but they were talking down the rally as it traded higher. And we're seeing that, interestingly enough, we're seeing similarities now, right? A lot of the people who you would look to for advice in these type of market conditions are really bearish, right? Really cautious. And the market has a tendency to kind of overshoot enough to get those type of people to calm down on talking down the market, right? Almost giving up on their like apocalypse thesis in a sense. And then the market loses momentum and starts to sell off a bit. And I think that's where we're at, right? So again, just eyeball test. We're kind of in the vicinity of here, right? Coming into this week. And you can see you got an upside niner there. So that's where a lot of people are looking for the market to roll over and sell, right? You had the big DeMarc article come out last weekend. I posted on Twitter. People lost their minds over it. About the market's probably going to run out of steam and it really doesn't look good, blah, blah, blah. Right? So, a lot of similarities. And I think the risk is if you do overshoot and that skepticism starts to die down a bit, a lot of times you end up paying the piper on the other side, meaning that you have to deal with a little more volatility, a little more selling when that momentum flips, because basically it's all chasing and all systematic flows that are pushing the rally. There's no real buying per se. Okay? So I think the risk is here that if we continue to overshoot to the upside from here, I think it builds more risk on the other side on a short-term basis. Okay? Again, do I think we go back down and test the lows? I have no idea. I have no idea. I think obviously a lot of things have to happen for that to be the case, but certainly possible. No one can, X that out like they have some crystal ball of some sort. But what I still believe is with the information we have in front of us right now, as of today, that if this market did run out of gas and we did start to see some selling, I still believe we look towards that selling as an opportunity to get long, right? And in the steam room, if you remember, we talked about last week, like some of those shorter term, intermediate term signals and indicators that we look at that really didn't offer much in the correction, I think these things start to become handy again. Right? That's where we're likely going to find our best risk-reward entries and exits going forward from here. Okay? Because there will be selling, right? I mean, again, I'm sure you guys are aware of this, but the market and players have a tendency of doing this, right? All bad, so let's price in all bad, forget about any good outcome, any positive outcome, right? And then the sentiment flips and you price in all positive outcome and no bad. And right now, what we're doing is the sentiment positioning was so negative that any good, right, that showed up, you get over exaggeration, right? And it's almost like it gives off the impression that you're not going to get any bad news, right? But snap of a finger, once we get through this period of Trump toning down these tariffs, if you guys remember the first time around with the Trump tariffs, how many times that China and the U.S. got together and walked away from the deal? And So the volatility is likely to linger, but in my opinion, I think that's a good thing. The longer I think we have to deal with this, and I know this is not a common opinion out there, okay? But I think the longer we have to deal with kind of these tariffs and the volatility of the tariffs, I think the more opportunities that are going to present themselves for us. Okay. Not only do they give us more time so we can allow more information to build up, right? See what names are outperforming, what stocks start to look constructive or into sell-offs, what names are they sweeping up into sell-offs, right? So you get more information, it buys you more time, and you keep sentiment and positioning in check longer, right? Because again, I could be biased because I believe in that information, obviously extremely, but my opinion, I think that's the most important thing out there right now for us to try to take advantage of is sentiment and positioning, right? In other words, it's no coincidence that once systematic funds as a whole got to a max short state, right? Any good news was going to be that much more of a catalyst on the upside. Okay, so right now, again, on a short-term time frame, I think we could push a little bit higher. We could overshoot in a sense. It could be sticky here, as I like to call it, because you're going to have bears trying to catch the short and that whole thing. But I think there's a lot more risk here on the long side where you kind of want to be more patient, even on the longer term stuff, if they've already moved off the lows as much as the market. Now, what we could see very easily is you could see the market start to chop around and maybe roll over, and maybe we start to see buying in names that really didn't participate in the upside or not as much, right? So I don't want to throw everything under one umbrella, right? If we start to see aggressive buying in longer term strikes in a name that really didn't participate in the upside, you don't want to wait too long, right? If it's at a decent spot. So it's probably worth taking a stab at and start piecing into if you're interested in it, right? So I think you just, again, to put into simple terms, right? Rewind 3 weeks ago. If you remember, I think I mentioned that we need to pivot and put our buyer's caps on, right? I think now you put your trader's caps on, and you got to be a little more prudent. Put a little more thought process behind entries here because of the risk. Okay, so and I'll show you why. Right, again, this is not me just watching CNBC and how I come up with the belief. I'm looking at the stuff we look at every week. Okay, so here's some of the big picture signals. We'll start with some of the bigger picture signals. Credit signals, right? These are credit default swaps. Basically, they made the low with the market, meaning swaps were starting to widen out a little more aggressively than we have seen for a while. Okay, and you can see with the market, even a little bit earlier than the market, they bottomed, they've tightened up here, and what this is telling me, in a sense, is that crash risk, right, that acceleration to the downside, came off the table, right? Again, not today, for the last few weeks. That's what this has been signaling to us, right? If you remember, the fear was as the market was making new lows, credit swaps and spreads would start to widen out even more aggressively and then possibly bring in the Fed. Okay? They obviously didn't do that. Okay? So what that was indicating is kind of what the market was concerned about, whatever it was, the credit market was concerned about. That concern's not here anymore for now, right? But at the same time, okay, and this is where I look to like credit spreads, you can see and these are inverted, okay, so you can see the correlation with the market. Spreads are still lagging equities in a sense. Now, high yield spreads are a little more correlated with the market. They've been tightening up a little bit more, but corporate bond spreads have not, okay? And a lot of times that would indicate that you're not in that risk on type of climate, right? Rallies are more defensive in nature. You see some of the quality large cap names seeing most of the momentum, most of the buying. A lot of times, and the result of that becomes a range-bound market, right? So even though credit spreads aren't widening out anymore, so there's not signaling caution per se, you're still not getting kind of that risk-on signal that tells you we can really start to build momentum on the upside, see some sectors breaking out, subsectors breaking out, that sort of thing, right? A new bull trend. So up to this point, they're kind of lining up with everything else we've been seeing and telling us that this has basically been a relief rally, right? Systematic flow is the primary driver, but a lot of things were overdone on the sell side and have rebounded. Okay? There's not any new risk being put on in a sense. This here is Sharpies, right? And I put a couple different indicators just so you can see. This is the Sharpie indicator in a sense, okay? When Sharpies are hedged, it goes in the red, and when Sharpies take off their hedges, it goes in the green, right? It's more on, I think, over the past year than overall. But, you know, what we saw into those lows, along with all those washout signals, was commercial hedges, Sharpies, remove their hedges. Okay, so again, another constructive sign, right? If Sharpies were concerned that things were going to unwind and something was going to snap, they more than likely wouldn't remove their hedges. Okay, so you had commercial hedges remove their hedges, which is a constructive sign, again, adding to that point of a high probability floor being put in. But, okay, and this is where this comes in. This is a chart, an indicator of Sharpies in net exposure in the S&P 500. You can see even though they took off that aggressive hedge, they really didn't get aggressive on the long side. They just removed that hedge, okay? And as opposed to this here, back in 2022, right? They removed their hedge. Then after that, you can see they really got aggressive on the long side, right? And that's a strong bullish signal, okay? So again, make to the point so you don't think I'm just concocting this out of my rear end that even though things were pointed to a high probability floor, that we weren't seeing any signals of that new risk on potential new bull market type of tape. Okay, so that's Sharpies. We saw credit signals, Sharpies. That's more of like big picture stuff. Here's more of the systematic flows. Right? They drive a lot of the shorter term, intermediate term, but could also play a part in some of those big picture. Okay. Here, and you can see here, even on this is from the JP Morgan's model, the prior week, okay, just a week ago, so they were for multiple weeks, they were max short. Okay. And like I mentioned earlier, when they get to a max short state, even if the market declines, they are not selling anymore, right? They're not shorting anymore, hence max short, right? So they're more likely to cover some of that short exposure into weakness, right? So that's an added bid in the market that we didn't have at all throughout the correction, right? So according to JP Morgan's model now, you can see some of these indexes, right, flipping more neutral, right? So they've covered some of that short exposure, and now they're neutral in a sense. Okay, so you lose a little of that tailwind. I mean, for now, for them to be a real force like they've had been, you would have to see momentum build to the upside, right? So as the price action strengthens, right, and SPX breaks levels to the upside, they would add a long exposure on, right? For the vol control funds, as VIX sells to the downside, they'll add more exposure back on. Okay, so we've lost some luster here. I mean, they were max short for a solid 2 weeks, if not more. I'm going back to the thing. Here's kind of the whole enchilada here, so you can see, right? Systematic positioning as a whole. This was, again, coming into the week. You're likely going to see this bump up. All right. But here's systematic equity positioning as a whole. CTAs down here. Again, you likely see this pop into the positive territory over there. All right. And what was interesting coming into this week was these vol control funds. And you heard McElliott in his recent note, if you guys follow McElliott, has been talking about this. Others, I'm sure, on social media who follow this, that these vol control funds coming into this week were really bullish, right? That, any little VIX selling, and these funds have some buying to do, some real buying to do. And then that's kind of what we've been seeing, right? So this is an indicator at a Deutsche Bank DB that I like to look at. And, when this is up in the 7, 8 or above, that's a signal of caution that if momentum starts to lose its luster, these vol control funds can have a problem to the downside in equities. Whoops. And when it's below zero, it's the opposite, right? So when it gets to below zero, if there's any positive momentum and VIX weakness, they become a nice tailwind for equities on the upside, right? So this coming into this week was still below zero. We'll see, once we get a new update for next week there. Again, here, quick synopsis if you want to see just in general, a lot of these, the systematic stuff that went into this. You just had a lot of these signals drastically improve over the last couple of weeks. CTA-driven equity buying, $51 billion last week and $57 billion this week. Right? So that's a big nut. Okay? Again, you think about it, right? The correction, these guys, whatever you want to call them, they were selling, right, with no emotion attached, just selling because they were max long and sat in max long for quite a bit. They were selling as momentum started to move to the downside in equities, adding to the selling pressure. Now, all of a sudden, over the last 2-3 weeks, the opposite has been the case, right? And you can see it playing out in the price action. Systematic exposure rising, blah, 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 and SPX earnings. Yeah, okay, we know that. Here's something else that really caught my eye on some of these things. These are the Ridex funds. You remember we looked at it. So it's fund flow. And they move money into bullish or bearish funds depending on how they feel about the current market. Okay. When they get really aggressive on either side, but more so even on the bearish side. Okay. So when they're aggressively moving money into bearish funds, usually more than not, you're at a point where momentum starts to turn. And you can see how aggressive they got here into that last few days of selling. Right? So what's likely to happen, and you can see it's starting to unwind a little bit here, you're likely, and you see, right, it unwinds often. You're going to see this unwind, and that usually has to happen before you can get any selling or any, cooling off to materialize in the price action. Okay, so we'll see as this updates. As you can see on the chart here, it doesn't take long. It's almost like, oh shit, we made the wrong move, and let's move money out of it, right? That type of thing. It doesn't linger for long. And these are just some of the other indicators, again, that we're flashing bullish into the lows, and they're still there. Again, this one, I think it's a monthly update from the conference board. Again, you're at levels you really don't see normally at your major lows or decent lows in the market, right? Like 2022. You had some of these things get down there and hang out a little bit, but not alongside everything else we were seeing. Here's 2008. Yeah, here's what is this now? This is 2023. Wow, it's amazing how washed out just normal sentiment has been. I'm not even talking about positioning. Some of these just sentiment indicators, and if you break it down, a lot of the left-leaning liberals that are being surveyed make up the bulk of the damage. but you're seeing apocalyptic sentiment out there. Apocalyptic. All right? And again, you could say, oh, this time is different, but a lot of times, especially when they line up with the positioning stuff, you're at decent lows. You're at decent lows. Even if they're not the start of a new bull market per se, they help put in a floor that can last a while. What else did I add here? I added a few. All right, so here are some of the short-term indicators we don't talk as much about during these corrections because, again, they're short-term indicators, right? In corrections, especially early on in corrections, you don't want to rely on short-term indicators. They fail, right? That's a signal you're going into a correction when they fail. But now, because of what we've seen line up into the recent lows as a floor, this is what we want to try to use as a compass in a sense to take advantage of now, right? For better entries and exits on a more tactical basis, and even I think for longer term stuff, right? It'll help with better entries. You can see how high we got here. Yesterday we got a decent flush. Was it yesterday or the day before? But you can see how high we got here and how quick. So we literally went from 0 to 80. So after today, this is probably, I would think, in the 60, 70 range. That's usually, right, not a place you want to start getting sloppy long. Okay? Even though it's a short-term indicator. Some of the other things, I know obviously you guys are in the steam room, but some of you on the webinar who aren't in the steam room may not be familiar with the squeezometer. Same thesis. It's I would say more of a short-term indicator, but below, when you get into 30s, it's more of a buy signal. When you get up in over 60, more of a caution signal. Above 65, even that much more caution, right? So you can see where we're heating up here as well. And tactical sentiment, same thing. Each and every time the market pushes higher, we're going to get sell signals across the board on these things. And that could pose a problem if you're chasing some of the strength right now. Oh, and here's the last one. Put the call, right? Just the plain vanilla put the calls. You got a nice spike into the lows to line up with everything else we looked at. This is, again, just our trading view. The equity put the call. And you can see we're getting that unwind now, right? So technically we have a little more of an unwind if they want. But once you get down, and the one we look at is kind of the CBOE equity put the call off trade alert. I think we closed at a 0.50 flat. And that's not where you want to do buying, right? When you got a 7 handle on that, on the equity put the call, coming off a low, that's a real bullish sign, right? Because players are still skittish. But once you get that unwind, you got to be careful. Just getting caught if you get too sloppy. All right. So again, I'm just showing you guys, some of the stuff that goes into what I'm talking about when, I'm just talking about the approach to the market, right? It's not crystal ball crap. It's strictly based on sentiment positioning and kind of lines you up where risk rewards are more favorable or not. All right. I mean, that's generally what we use it for. All right. Quickly, the flow. Here's what we've been seeing in the flow. A good amount of 2027, late 2026 leap buying. We saw it in like names like Now, Net, Avgo, a lot of the mostly quality, I would say, right? The better looking action, especially the ones with time, has been in the quality names, the names they usually buy first. Right? So if you're on the sidelines, you may not be convinced that it's the start of a new bull market, but you think the lows are in for now and you want to do some buying. A lot of times these institutions will, they'll buy a Microsoft, right? They'll buy some of those type of names. So a lot of the longer term buying has been there for the most part, which is normal. The shorter term action really hasn't picked up the way we would like. And here's what I mean by that. Very similarly, the shorter term action has been in a lot of these high beta names. So these hedge funds who don't have exposure on, they're looking for exposure, right? Or they're short, they're sweeping Tesla, they're sweeping Microsoft, right? They're sweeping Avgo. So those are the names primarily that have seen some of the aggressive action. Tesla today was like, I mean, for most of the day, part of the only thing they were buying like that. All right. I think it was June 6 calls. Yeah, that's what I got up here. June 6 300s. I mean, if I had to guess, what were we talking about? Maybe $30-40 million worth of buying there. Now, I don't know, if anything closed or anything is planning on closing. It's Tesla, right? You got bulls, bears, you got everybody and their mother trying to play that stock. But that's what we're seeing right now, and it's not surprising, is the point I'm trying to make. Okay, we're kind of pulling out of the heart of earnings season this week, all right? As each and every day and week that we go from here, we're likely to see the action start to clean up. More of some stock picking in underbelly names, right? Under the hood type names. Not small caps, but some of the lesser active names, right? Not the names everybody's trying to play right now. We haven't seen a lot of it. We've seen very isolated buying, just a sweep, and that's it, that type of stuff. So, like for example here, right? Like EMN, that's chemical name is a decent sweep. September's, Estee Lauder, October's, all right? This is a biotech. So it's very selective and isolated action. No real appetite yet to do some stock picking. That risk appetite's not there yet. All right, it's more of systematic flows, creating momentum, people chasing, covering shorts. All right, you get that little frenzy of momentum going, and that's what we've seen primarily. What I wanted to show you is something else. Hold on. So this too goes into the category, from Goldman. You guys have seen this in the past. Funding spreads that are signaling that some of that risk appetite from the sharper player out there, it hasn't come back. Okay, so funding spreads, if you remember, before the market rolled over, you really had some risk come off the table. That's this red line here, right? It's kind of deteriorated from there at a slower rate. But you can see as equities have rallied here, they haven't stepped back in and anteed up risk-wise. They've been utilizing the strength to take some more of that risk off the table. All right? So, a lot of times what you'll see like you saw back here, right? They'll step in and do some buying, especially off pullbacks. Yeah, I wouldn't. Again, you don't ever want to be scared, especially when you're seeing things like this, right? When you're seeing sentiment positioning stuff like I'm showing you here, Papu, like we've been seeing over the last few weeks, you don't want to be scared because that's what everybody is, And when you're seeing this type of stuff, it's really difficult for a market to sell violently. Like you need something to go bang, right? Like, well, off the top of my head, a period in 2008 is the only time I remember seeing that players were that bearish and the market continued to sell off in a violent way. But you're talking about the apocalypse 2008, right? I haven't seen anything remotely close to that before or since then. So a lot of times when you have sentiment positioning this washed out, you're you're going to see things that rub you the wrong way, make you skittish. Like, here's another example. Like I mentioned earlier, a lot of the people who know the game, right? And, I'm talking about well-known names who have made great calls over the course of their career. I would say 9 out of 10, if not 10 out of 10 right now, are all bearish. All bearish. And they've been bearish. Okay? And they've been bearish. So, and what's likely to happen when you see that type of sentiment? It's not going to be bearish. That's what everybody and their mother. The more you knew about this game and macro in 2022, the more bearish you were going into 2023. You understand what I said there? The more market savvy, more market intelligence you had, the longer you were in the game, whatever it was, okay, the more bearish you were going into 2023. And what happened in 2023? The complete opposite happened, right? The complete opposite. So, even though people sound like they know what they're talking about, and it's not easy to make these big macro calls. And when they all agree on a call, they're more than not wrong, right? So you got to try to block that out. Because again, if they're bearish, obviously what you're going to see is going to make you skittish. You know what I mean? That's totally normal. But you'll realize once you're more around this information, that when you see the crowd that bearish and all singing the same tune, you have to start looking to the other side. You can be more conservative if you're concerned, right? You don't have to be aggressive if you don't want to be, but you have to at least start to be looking on the other side. Because this game is not that. Listen, you could be some of the sharpest minds in the world lose money in this game, right? Especially like on a call-to-call basis. On a call-to-call basis, anybody can lose. So, but hence why positioning and sentiment to me, I think, is the most important thing. I'd be completely in the blind if I had no idea how sentiment and positioning lined up. No idea. I wouldn't be able to measure risk at all. At all. For me. So, hence why, I talk about this stuff so much, especially on these webinars. Okay? So, again, on a short-term basis, and I'm not trying to talk out of both sides of my mouth, but because you still, like I said, you have a lot of people bearish, you can overshoot here, kind of like we did in the summer of 2022. But even if you do, I think you want to be careful. Even like us, we're talking about like we still want to lean bullish. You want to be careful on a shorter term basis because of how far we've come right now. Even if we do overshoot. Because I think through a risk reward lens, even if we do overshoot from here, it's still not worth the risk of getting caught on the other side might look like on a short-term basis. All right? But what I'm here, even more importantly, to make the point of is that whenever we start to lose some momentum on the other end, okay, and it's only going to take a week of bearish price action, especially with Trump, to get everybody bared up again, even more so then, that's the time where we got to keep a clear head and start to focus and look for long opportunities if they present themselves. So, and now here's the other thing too, right? The market, you see, right? Like now the trade is you kind of, if you want to call it easy money, not even easy money, but you guys know what I mean, is getting in the middle of these Trump headline programs, right? Like, if you took a step back and looked at the market, especially over the last week here, okay, the majority of names that are up significantly are all earnings related. Okay, so you would have to take the risk of buying through earnings, and you would have got rewarded on some, and some you would have got hit over the head, right? So that earnings risk you had to take. Other than that, the bulk of the moves have been on Trump headlines, right? Yesterday, market was dead, semis weren't doing anything, and then you had that Trump line of, taking away the semi tariff for the semis, AI related, and you had a nice quick squeeze in the semis. Today, I'm sure you don't need me to tell you what went on today, right? So that's kind of the market we're in right now. And you want to get in the middle and scalp. Well, at least me, I have no problem scalping the long side of those trades, getting in and out, um, and then looking to take advantage when that sentiment turns to the other side, right? So when we start to see selling on these headlines, that's where I'm looking to start adding long names. And hopefully I can, listen, here's the thing, guys, you got to understand about me. I'm not buying Microsoft. Okay. I'm not going to buy Microsoft. I'm just not doing it. It's not my cup of tea. It's not my niche. You understand? Like names that I like, large mega cap names that I like longer term are investments. I leave them there and that's it. You understand? Um, you guys know what I'm looking for. I'm looking for more of that underbelly action, not small micro cap, underbelly action, right? So again, some of these names we have talked about in the past. Okay, I mean TEM has looked good, right? TEM looks really good. Okay, I'm not going to buy TEM here, up here, right? It doesn't make sense. What else? The RBRKs of the world, right? Same thing. I don't want to buy RBRK up here when I own it cheaper, right? So I'm looking for new names in this arena. All right? RBRK is an $80 stock. It's not a micro cap. So I'm looking towards that. That's what I'm holding out as long as I can for that. Okay. If we don't see those type of names, example 2022. Okay. These names didn't start to show up to the calendar flipped in 2023. If these names don't start to show up for a couple of months, then more than likely I'm going to end up buying, again, ASML or some shit like that they're buying. But I'm trying to hold out as long as I can for new leader type action. I saw the TEM. Yeah, Tish, I mean, don't even feel bad because that's why, like, some of these names, when I buy them, if I want to hold them, I don't trade them. Because that's the story of my life, Tish. Every time I sell, I never get back in. I could say it till I'm purple in the face. I never get back in. Never. So, like, I kind of hold, and I'm willing to give up profits for longer term, more gains in a sense. And then when I sell it, eventually I don't look back, right? That type of thing. But these are the names I think. Like, I don't want to be in mega caps. I didn't want to be in mega caps over the past 2 years, and that was primetime mega cap, right? Like, I definitely don't want to be building position in mega caps now. I just don't want to do it. I don't want to do it. But I get it. I get it. A lot of you like these names. They're liquid. You've had success trading them, especially over the last few years. Right? To each their own. Some of you probably don't like trading the names I like and some of the others like in the Steam Room. Okay? I'm just telling you personally because I don't want you guys thinking I'm talking out of two sides of my mouth. Oh yeah, it's time to start buying names longer term, and then you're seeing like Avgo leaps and Microsoft leaps, and I'm not buying them. Just in case you were wondering why. That's all. Yeah. That's you can't. I try not to talk about exactly. So try not to pay attention. There's another name too, like I own, that I like, right? TTAN. But these I want new names. I don't want to go back to names I already own pieces of. So it's just the underbelly action hasn't picked up yet. There's been some, but I kid you not, a chunk of the names that have seen action that I'm interested in, I'm in already. No bullshit. Okay, uh, TEM has been active, right? I'm already in it. EQT, this has seen nice action. I own it down here, so I can't. I'm not buying it up here, right? But it's been solid. RBRK we spoke about has been seeing decent action. It's at new highs. I own it over here. You understand? But if there's another name at a much better level than where these things are trading at that's seeing new action, I'm ready to go. I'm ready to go. Here's a name too. You guys remember we were talking about? Quite nice action. BTDR. Yeah, this is, I guess, a Bitcoin proxy power play. But you guys, listen, and I tell you this for a reason. You should be more concerned. The only thing you should be concerned about is me giving you the nod on the flow that it's catching, not what I'm doing. You know what I mean? That's You're focusing on the wrong things, and not saying you guys are, but I'm just saying in general, right? What you should be paying attention to me is only for the flow and the sentiment and that sort of thing, not the action I'm taking, because I'm just as good as any of you out there and no better. You don't think I sell too early and I miss winners because I don't pull the trigger? What are you, nuts or what? So the only thing you should be looking for me to give you the nod on is the flow legit, right? So all these names that we're kind of talking about, right? Big Deer, I think it was September action that it caught. It was good looking action. It was good looking action. The leaps that we've been talking about. Here's a name you might have an interest in. ARM. You guys obviously know the name. There's been a 2027 leap buying in ARM. They reported yesterday, right? So the stock was down a little today. Now, if you're not totally sold on the name, personally, I think you want to see them come in and do some shopping in those 2027 goals. The reason being is because of earnings, you're not sure if it's earnings replacement or clean, right? That's the risk, okay? So if you're not sold on the ARM, I think you should wait for those guys to show up again. But if you were looking for ARM as an entry into this correction, I think you have it here, right? If you're buying leaps, you shouldn't be concerned with what the stock is doing today or tomorrow. All right, so these are some of the names. ARM, Net, Now. These are all names that have been seeing leap buying. All right, this is another great name, Now, that doesn't get spoken about as much. Avgo, ASML, what was another? Anybody see here? You remember any leaps or especially post-earning leaps? What were some other names? I'm trying to think. But a lot of these names, a lot of these type names. What are you guys saying? TTAN. This is I didn't buy this recently. I bought this earlier this year off some action post IPO. But no, this is what I'm talking about. Is this is the type of name, Tish, that I'm looking for. These type of names. You know what I mean? More of these kind of underbelly growth type names. It's not a cheap stock. I think I paid what, $99 for it. So it's not like it's a micro cap, but these are the stocks. Like when institutions start buying these things, this is where you get these explosions. Right? We talk about it all the time. So once you start seeing some flow in it, right, that's kind of like tipping you off to interest building in the name. And a lot of times I like to, I'll trade it and then I'll leave a piece. That type of thing. The only thing I bought recently is this you guys know about, but this is slow though. You know what I mean? I don't know if you guys, you know what it is? K-View. I bought this name recently. September calls. I bought a little stock, but I traded the stock. I sold the stock already. I still have September calls. And what else do I have? Nothing. Oh, yin. I've had yin. I added to yin. When was that? What month are we in? May? April, I think. Last month, right? I added to yin. It might have been. Anyway, I had yin and chow. Remember? I sold the chow and I put it into yin instead. And those are Jan calls. So that's all I've done really recently, overnight holds. A-Lab Marvel. Again, these are names of the past. A-Lab, I would kind of lean towards more than the Marvel. But, this is, again, these have had their day. But don't get me wrong, listen. If we see aggressive buying come into A-Lab, I definitely would tell you about it. You understand? It's definitely legit. I'm just personally me. I'm not going to buy A-Lab without any new flow, if that makes any sense. No. I just play the U.S. market, Stavro. I'll play ADRs once in a blue moon. We saw some flow in these China ETFs and China names, so I didn't buy any of the China names. So I took a shot on the ETF with some time. What else? Hood, yeah. And see, this is where, for me, it cost me money. And I'm just telling you the truth. Hood is not really a name that I'll buy or build a position in here. I'll trade it, especially day trade it often. Okay. But, Hood already is a name that hatched in my eyes. Like this name, if you're in the steam room, you know what I'm talking about. They bombed the living daylights out of calls in this name last year. Like I'm talking about ridiculous buying. Ridiculous. Okay? So, I remember this thing, all kidding aside, down here catching crazy action. And now it's at $50. Even with this correction, you're up in the 50s. So, it's more of a trade, right? At the right spot, you see some decent action. It's more of a trade in my eyes. Why? Because you'll never know if the buying's clean or not. There's so much open interest. They roll often. Because of all that buying last year, they roll often in Hood. But this, especially last year, we talked about this name. This is not a bad. I think some of you did tuck it away, right? If you like the name, you tuck some away. But the flow's been nonstop. I do want to look at regional banks. Yeah, I had a buddy of mine too talking about regional banks. He thinks if they start to get going, it can get really hot. Somebody else was talking about that to me the other day. Yeah. This video gets saved on, where does it get saved on? Either my Twitter or YouTube, I think. The end. I don't think we don't erase it. Tobias Bull, yeah, that's a Weeble, right? Yeah. Again, squeeze here, right? But not really my cup of tea, Tobias. Because of this, Tobias. The stock went from 7 to 80 already. All right? So, for me, if I was going to play it, again, I'm just telling you how I approach these things. Down here, if it catches flow, right? If they come in aggressively and they're sweeping bull calls. If it's not up too much already, I'll buy it and I'll flip it. Right? So I'm just trying to get in the middle of the squeeze. But buy it and build a position and hold 6 months, I wouldn't do it in this name. You know? I wouldn't do it in this name. You got to understand, guys, there's a method to the madness of the names. Like, I want to buy and then I want to leave some. Like, I one either got to really believe in the story of the name if the fundamentals are there, but a lot of times, like, I want them to be real growth names. You understand? I want them to be real growth names. Like, if I'm going to buy a speculative name, I want to buy it before everybody's eyeballs are on it. Then I'll buy it. Then I'll buy it. Like some of these Bitcoin miners, you guys remember, right? Like these Bitcoin miners that we see trade every day and we see people talk about every day. Some of these nobody even knew existed when we were buying them aggressively. BitDeer? Nobody heard of BitDeer, But once everybody's eyeballs are on it, and once they start playing it, it becomes a different animal. A different animal. These are the names I like. These type of names. This is like underbelly, what I call underbelly quality growth, right? Growth just under where, the average player of the market is aware of. I know not many people talking about the name. And then before you know it, if things go right, okay, it becomes crowd, right? Or it becomes PANW. It becomes that, and then everybody knows about it. But at that point, you should be up a lot of money. Yeah, Wolf. Remember, see, we were buying it. What was that? $1.90? Wolf, right? What was the entry we had on Wolf? $1.90, I think, something like that. So, like, these were names that nobody even was paying attention to when they were catching that action. Yeah, then you have an edge. This Webull. I mean, this thing was the hottest thing, and maybe still the hottest thing around. Like, look at this. Right? This had everybody's attention. Oh no, yeah, I haven't added. I thought you said you added. I was like, wow, I didn't add two. Up here, and kind of that dip. I didn't have the coconuts to add either up there. But yeah, this is these are the type. Ideally, I love small caps, trust me, but these are the names ideally that I want to buy. I want to have a position in, and I want to leave some behind. All right, these are the beauties, because I told you this once, and that's where the flow is providing an edge, right? So you got names like this, and we went through this, right? RBRK goes public, okay, and after the IPO, kind of is dormant, right? Range bound, quiet, lighter volume, okay? Then you start to see sweeper interest, okay? What the sweeper interest is tipping us off to is that interest is possibly building in the name, okay? And a lot of times after you see sweeper interest pick up, it leads to institutional interest picking up. And if you're in a name while institutions are building a position, right, you get this, right? You get these eruptions because there's no sellers. There are no sellers in these things, right? Like even TEM, okay? TEM obviously caught the Nancy news. That was the catalyst. But you remember the rip in it, right? Like, there was just no selling. It was insane. The stock went to 100 in 2 weeks. Yeah, this RBRK looks really good, and we've seen flow. we've seen flow out of this correction. But again, I want a new RBRK, Tish. You know, I'm kind of I waited this long. I'm willing to hold out a little bit longer. Just in case these names start to pop up. The last thing I want to be in, and even if I'm making money, but the last thing I want to be in is Avgo and Microsoft and all these names, and then all of a sudden they start sweeping all these names up. Yeah, like that I don't want to do. That I don't want to do. But yeah, I can't tell the future. I don't know what this RBRK ends up doing down the line, but now it's a cybersecurity name that is institutionally owned. Okay, now you have hedge fund managers, institutions that have built positions in this thing, and it's what 100% higher than where they were sweeping it up, right? At the least. So yeah, I played. Did you play TNA Sahil today? I played a little TNA today. I mean, I want a small cap rally so bad. I mean, I think the problem is the names Sahil in this small cap index are a menagerie. But if you the recent Goldman note, that's what they're talking about. Like the right tail. If you're worried about the right tail, or if you want to play the squeeze from here, it's small caps are the way to do it. From here, like that's where they think you get the biggest bang for your buck. But I hope so. See how I would love to see the market chop around and small caps kind of outperform for a little bit. That would be great. Yep, good call, Tish. Maybe right. Maybe it's waiting on that. The Fed cutting rates, and you see, this is kind of think about where we're at right now, right? Okay, because like a lot of times you get caught up in the short term momentum. Like when the market's going up, you feel bullish. When the market's going down, you're bearish. But you got to take a step back sometimes and take a big picture look. Like right now, we have better news out there. Okay, you have Trump unwinding some of these tariffs, better economic data, but at the same time, you're not getting the Fed back on your side, right? That was kind of the main catalyst, if you remember, to look through some of, even if it wasn't pain, the stickiness that might be on the horizon. If you get the Fed back in your corner, right, whether they cut rates or whatever they need to do to help fix things, that'll help. That will help buyers look past the next few months of dullness, in a sense. So now that you got improvement, that kind of has been swept aside, right? And now you're left with a market that's not cheap, right? That, yeah, you got economic resilience, but really nothing to get excited about growth wise. You understand? And potentially some of these earnings being affected by tariffs, right, next quarter, because it kind of gets everybody storing up, right, and trying to beat the tariffs from coming. So that's kind of what you're left with the market after this move. And that's what people are going to start to realize eventually. And I'm not saying that's cataclysmic, but it's tough to get excited about beyond 6,000 SPX. You understand? That's the problem, right? That's the problem. Longer term, right? If you go out further, kind of like we were saying, if Trump gets his way and things work out the way he envisions, right? Less government regulations, more stimulus, that sort of thing. Maybe you start to price that in growth wise, but I think it's too early for that. I think it's too early for that, right? If you get the Fed back in your corner and you get some sort of Fed intervention, and then the addition of that Trump pump the following 2 years, that's what I think is the big ticket trade. But yeah, that may take time. PCT, I saw that earnings, right? Well, earnings. Yeah, so 6,000 like it's going to be it's going to be tough. But I don't think, Sahil, the good news, right? And you know this already. I don't think we need to be too focused on it because we want to look towards names. And even if the market's choppy, we might find names that find alpha names, basically, right? So, we're not big index guys anyhow, Sahil. But right now, it's all index. If you remember, Struck, we were talking about this name because it had a little bit of flow. I think Druckenmiller has a position in this. I think. Did we come to that conclusion? I think we were talking about it. But yeah, I saw the pop off earnings. Did you play it into earnings? Do you own this? I mean, listen, down here, if you want to buy it just to tail Druckenmiller, kind of not the worst idea. Heavy short position too, so I think worst case, maybe it just gets stuck down here a little bit for now. But probably worth a shot as anything else out there. Because it hasn't ripped yet. So that's the good thing. All right? Yeah, why not? Here's another name that looks good. We were talking about, right? A few of you own this name longer term, Schwab. I think you want to wait for a little bit of a rest here now off this niner, right? You can see off niners, this thing likes to breathe a little bit. But, you possibly got a big breakout coming here in Schwab. And so, you like the regional banks, these names might be that crew, right? This name might be the crew. Yeah, so listen, regardless of the next couple percentage points in either direction, right? Because obviously we're just technically a little overextended. It's hard to be bearish with everybody as cautious as they are. It really is. It truly is. Right? I think, again, even if you are cautious, I think in a conservative way, you want to lean bullish and look for opportunities into weakness. I think here you want to be really careful of being a sloppy bull chasing strength. Because again, just technically, if we overshoot, we may have to pay for it a little bit. It's amazing. I don't get it. I don't get it. I don't care tariffs. People are telling me, because tariffs, that's why everyone's bared up. Get the hell out of here. Especially when we went through tariffs already the first go around. And people know it's temporary and we know this whole shtick already. How are people this bearish? How? I don't get it. I don't get it. Now listen, look at this. The sentiment survey. Finally, an uptick in bulls this week. Look at this. You realize, and I don't even put much emphasis in these sentiment surveys, but again, with everything else, You have to take it into account, right? It's lining up with everything else you're looking at. You you had readings that you would see in 2008. All right. These are like mom and pop investors, and they're panicking. Okay. It's got to be politics. 100%, Sahil. Gotta be. Gotta be. All right. Gotta be. So here, like, look, we were down to 20 last week. As the market is bouncing, more bears. You're getting more bears as the market's bouncing. So, that told you that just the market can't sell. You can't sell when that's happening. You finally got an uptick in bulls this week. And on the other one, too, here. NAAIN. Yeah, good call. That was the other thing, guys. Buybacks, right? Like you think about it. You had everybody bearish, right? You had everybody underexposed, and then the market at new lows, and you had CTA's max short only could do buying, and the buyback window opened. And have you seen the buybacks? Oh my God. Have you guys seen the buybacks? I think I posted them on Twitter too, didn't I? Q1 earnings season has seen a surge in buyback announcement to new highs. Look at this. Yeah, they listen. Yeah, I don't want to come across as political. Right? I throw them all these guys in the same bucket. Right? Politics, schmolitics. I think they're all the same. Right? But like there's a method to their madness. You know, they're trying to do something here, to cool things down, get a reset. Right? They were telling you about a detox. Just people can't handle it. People can't handle it. It's amazing that after 2 years, up years like we had, people couldn't handle a correction. It's truly amazing. Truly amazing. Truly amazing. But that's like this backdrop is a luxury to have, and what the last thing we want is an overshoot where you get these bears to flip here. You know what I mean? You don't want that. You don't want that. What we want is we want this bearish positioning to put a floor, right? Put a floor in things, but because things aren't lined up for that new bull trend, we're capped in a sense, like we're saying, Sahil, 6,000, right? But at the same time, if we're looking at the market the right way, which we've been talking about the last several weeks, you're looking to put on long exposure and gain exposure during this process, right? Because then when those bears have to come in and flip bullish for the right reasons, that's when the fun starts. That's when the fun starts. So, we'll see how it plays out. No market correction is the same. They resemble each other at times. And up until now, again, the 2022 low in the summer, a lot of similarities on the positioning side of things. A lot of similarities. Okay, so where are we here? Here, all right. So if I could draw it up and have it my way here, right? Here's how I would draw it up. Here's the summer low, right? Okay, even if we get, right, let's say we're right here now. Okay, let's say we're right here. Even if we get this overshoot, I I don't think this happens. Okay, again, things change, so we'll reevaluate on the way. But I think you get more of a choppier, stickier, where they got to sneak weakness in. You've heard me say that, right? They sneak it in, like you don't even realize the market has lost momentum and got a little toppy and is starting to pull back a little bit. But like when you get that pullback and we start to see some of those shorter term sentiment and positioning signals flash green, that's where I think we want to find entries. Okay. But all in all, in the meantime, anything, right? Anything in here, anything that happens here in this period, that's where I think the flow provides a huge luxury, because that's where you want to see what they're buying. That's where you get those sweet spot entries. Okay, because even if the market does that, what's likely to happen is there are certain sectors and names that outperform, that hold up better. So you lose that correlation, right? Here's the thing, kind of look. Right? S&P 500 correlation. Remember we were talking about this? Okay? So when you're down here, the risk is if the market rolls over, you get a spike in correlation. You got nowhere to hide. They're going to sell everything, right? So as you're getting that spike in correlation, everything's getting hit. So you don't want to buy anything, okay? But then once the market bottoms out, okay, even if it's range bound, like you get kind of this, right? You see this? Tops out. And even if the market being choppy, it starts to roll over. It becomes less correlated to the indexes. You start to get outperformance. You can find alpha in individual names. Right? So during this unwind, that's where it pays to be a stock picker. And not only that, it pays to be a stock picker. Like people say, this is a stock picker's market. Yeah, it is, but it's even more difficult to make money because you may pick the wrong stock. There's a high probability you pick the wrong stock. So the market goes up, but the stock doesn't go up. You understand? Here, the opposite happens. Okay? You have more margin for error. You understand? You could pick out of the 4 stocks that catch flow, you can buy 3 of them and you'll make money. So all of it, right? And you remember we were talking about this into the highs. This scared me the most. Like scared, I hate that word. This concerned me the most out of everything. Okay, out of everything into the recent highs, this was what the most concerning. Because again, there's nowhere to hide if it turns. You understand? Now you're up here. That's a lot better setup. A lot better setup. Here's the tech one. This is S&P 500, and this is tech. Look at that. Okay? Here's the 2022 summer lows, right? That I said it resembles. Okay? Look what happened from the summer to the fall into 2023, the beginning of 2023. See that? And then, whoop, goodbye. Yeah, VIX contango. It's still in contango, VIX. That's why the whole vol control funds are upside down. I know. This is kind of what this chart I was showing earlier shows. Vol control funds to a market, a 2% sell-off. Nothing. Negative. Meaning that they buy. You understand? They're buying S&P 500 if vol pops. The opposite. in a sell-off, right? Because usually it's up here. And that means they're aggressively buying VIX. Here, they're selling VIX. But, Sahil raised a good point, like the buyback authorizations, if you play some of those bigger names, some names that maybe are out of favor, where I have it here somewhere, right? Let me see. I get them weekly. Here it is. Look at this. So again, I could be wrong, but I think the big buybacks, if you put them into if you pile them up and you weigh them against the market, they outperform on an average of like 8 to 10%, something like that. But you literally had nothing on there. They were in a blackout period as the market was selling off. And then you get all this. Delta had a big one. So, yep, AJ, I'm about to wrap it up here too, guys. All right? So again, the moral of the story here, guys, is we don't pay too much attention to the indexes and what they do here. We could get a little overshoot, and then we may have to retrace a little, just, again, technically speaking. But in my opinion, you don't want to get too wrapped up in that. When we do start chopping around or when some weakness shows up, again, we want, even if the indexes have to come in, we want to lean bullish and look for opportunities, right? Maybe opportunities don't present themselves as aggressively as we hope they do, right? Maybe we need to be more patient and we wait for things to start to look constructive. But I think the important thing is we have to lean that way and not get wrapped up in what the crowd and consensus is doing right now. Because you know what they're going to do. As soon as the market starts selling, they get even more bearish, right? Even more bearish. So, again, that's not my opinion, based on the things we looked at today, that's what they're indicating to us. Okay, and the beauty is we're coming out of earnings season here. So we'll have a lot more names to talk about on these webinars. Yep, Sahil struck. I'll see you guys later. Everybody, thanks for stopping by, as always. All right, and I'll see the Steam Room people. I'll see you mañana. The rest of you, I'll see you next week. Enjoy the rest of the day. Stavro, Kalinista. Have a good night, everybody.